Welcome to your weekly market update where we talk about everything mortgage and real estate related. Have some great information to talk about, so let's jump right in it. First off, existing home sales, which measure closings on existing homes, show that sales are down 3.4% in April at an annual pace of 4.28 million homes, which was right in line with what we had estimated. On a year-over-year basis, sales are still down 23%. The slower pace of sales is all due to inventory, which remains extremely low. Inventory levels increased slightly from last month to this month to about 1.04 million units, but remain extremely low. There are only 2.9 months supply of homes, which is tight because 4.6 is more of a normal market. But if you just look at the active listings, there's only 563,000 active listings, as most of the homes counted in existing inventory are already under contract. So really, we're closer to under 2 months of inventory for existing homes. We need more homes to sell. Now, homes remained on the market on an average of 22 days, down sharply from 29. Again, because of inventory. You got a lot of multiple offers. 73% of homes are sold in less than 3 days, up from 65%. If the home is priced correctly, it's selling fast. First-time home buyers accounted for 29% of sales. Cash buyers were 28%, and investors were 17%. So if we break down the numbers, about 40% of all financed homes are being purchased by first-time home buyers. Not a lot of move-up buyers going on right now. Now, as for new home sales, which is outside of existing, these are brand new homes being sold by builders, which measure contracts for new home sales, rose 4% in April to an annual pace of 683,000 homes. So the sales still are the best that we've seen in about 13 months and are up about 12% year over year. So builders are seeing more traffic in their new construction homes because of the lack of existing home sales and inventory. So Zillow, this is a pretty cool fact, Zillow recently released their forecast of home prices, predicting home values will increase by roughly 4% in 2023. It's not far off from our forecast, which we talked about in the last video, about 5 to 6% increase year over year. Now, 4% doesn't seem very exciting, especially some of the numbers we've seen in the past, but it is very meaningful when it comes to wealth creation. If you have a $500,000 home and it went up 4%, that's $20,000 in wealth that you created. So just keep that in mind. Real estate, is still one of the best investments that you can make, whether you're going to live in it as your primary home or you're going to buy it as an investment or a second home. As for mortgage and inflation, so the debt ceiling fears and banking crisis has caused a temporary rise in rates over the past week and a half. This is primarily due to the banks having to sell their bond holdings to come up with capital deposits for the customers that they lost on their bank run. In addition, the debt ceiling, when that debt ceiling gets approved and raised, the Treasury will have to create and more supply by issuing bonds. And by issuing bonds and creating that supply, it's going to drive down the price of bonds and then increase rates, which we have seen over the last week and a half. Now, due to these factors of what's going on with the banking crisis, I do feel that the Federal Reserve is going to put a pause on increasing rates, which will end up being good for interest rates. And when that debt ceiling gets lifted and approved, then that'll alleviate some of the fears and uncertainty and then get us back to more of a normal market and focus on inflation when it comes to interest rates, which will then drop rates going into the summer. So last but not least, mortgage applications were down 4% from last week to this week. And yes, because of what's happened with the debt ceiling and also the banking crisis, interest rates did rise from an average of 6.57% to about 6.67%. Now, it's super important to realize if you can find the right house with the right budget, that's going to fit within your parameters, then that's most important. And please always remember, you do not have to put 20% down to buy a home. You can put as little as 3% down, and we have a great down payment assistance programs to help with that. So give me a call if you have any questions. Happy to help. 847-942-1497. Bye.